Money FM 89.3. Best of breakfast. Companies to watch.
All right, lots to talk about today, especially with the tariffs going around. And to help us out navigating what you should be keeping a closer eye on, at least. Dan Koh, good morning.
I think the relief that we're getting is that the weekend is here, Ryan. But yes, I think tariff has got to be at least on top of most investors' mind. So let's get started with companies to watch. That's a segment where we spotlight and stock you up with ideas of listed companies or maybe even topics that will call for your attention. So we're looking at market trends, two risks, as well as hidden gems or warning signs to steer clear of. 8855-0893 and tell us whether you think it's gonna be a hot or not. Ryan, are you ready?
Let's go.
Okay, Ryan. Okay, Ryan. As the week passed, right? All right, yes, we're turning to a precious metal bought by many people across the world for different reasons. Ryan, for one, would wear it as an accessory.
Oh, yeah, sometimes.
Often influenced by social-cultural factors, market conditions, and macroeconomic drivers in their country. Do you own any gold, Ryan?
Yeah, I've got my chain, sometimes I wear on the weekends.
Do you actually?
Yeah, sometimes when I feel like it, yeah.
Can you wear it on Monday? I like to see that.
No, it's a weekend thing.
Oh, man. Okay, all right. All right, it's shiny, it's metallic, and it melts easily into bars and into Ryan's heart. It can be coins, jewelry. Well, gold, at the end of the day, is golden. And prices of gold had climbed to a record after President Donald Trump unveiled his sweeping reciprocal tariffs, imposing a minimum levy of 10% on imports and stoking fears across the board that his agenda might trigger a global economic slowdown. So just to recap very quickly, Trump said that he will apply a minimum 10% tariff on all exports to the US, and dozens of other countries with the largest trade imbalances face even higher rates. We're looking at China, which is set to face 34% levies, while the European Union is set for 20% and Vietnam at 46%. Now, according to the White House fact sheet though, bullion was the only one of the few commodities that was exempted from the tariffs. And in the morning session of Asian markets yesterday, spot gold prices registered new highs at $3,167 per ounce, while the gold futures expiring in June hit a peak of $3,198 per ounce. But of course, prices settled in the afternoon once investors started to digest the impact of the trade tariff, and it also followed a 0.7% increase on Wednesday. Any surprises in terms of price movement of gold, right?
Yeah, I'm just taking a look at the wider trend, and this has been the trend for the past few years, actually. It's been going up, and in fact, if you look at the past few years, it's actually outperformed equities. So I'm thinking of gold's performance in 2024, I believe it's over 20%. And I think if you look at equities, it was pretty much the same or even lower.
That's right.
Gold is continuing to outperform against this backdrop of uncertainty. And in some cases, demand from central banks is also driving it. So you've got a lot going for gold.
Okay, right. But, yes, Ryan. Yes, indeed. It's maintaining its shine, Ryan. On a month-on-month basis, we're seeing that its prices of gold are up by 6.9%. Year-to-date, it's up 18.7%. And year-over-year, it's up 36%. And it's currently trading at 3,112 points as of this hour. Now, that being said, Ryan, it's the narrative that we've been seeing played out across the board, especially among investors who are flocking to gold as concerns mount over the health of the global economy. According to analysts at various banks, the demand forces that have led to above normal gold appreciation are likely to continue. So, Ryan, it looks like the gold chain is paying off.
Yeah,
So,
I might sell it one day.
oh, okay. Keep it, Ryan. I like to see it on you before you sell it. Now, they added that the additional support is expected from central bank buying, bullion-backed ETF accumulation in developed markets, and Chinese insurance firms' potential to make a significant allocation of the precious metal. Now, right before Trump's tariff announcement, we've got both BMI and State Street Global Advisors also raising their gold price forecasts in light of the yellow metal sustaining record-breaking rally. Some factors includes, escalating trade uncertainties, heightened geopolitical tensions, a weaker US dollar, increasing central bank purchases, as well as rising risks of a recession. These are some of the factors that many of these banks have highlighted would further fuel the bullion's run. That being said, forecast revision for most of the market watchers pretty much going in the green for gold. Global gold ETF holdings also increased in March for the third consecutive month by 2.7%. That represents one of the highest since 3 years ago. Now, the team at, I believe, State Street Global Advisors are also bullish on gold price rally over the next 6 to 9 months, with the potential to break out into the $3,300 range to $3,400 per ounce range. But then again, Ryan, it's worth noting that, the path is unlikely to be linear, and gold investors will likely grapple with a period of consolidation. So you can expect to about at least 5 to 7% drawdown. And it is quite common for bull cycles, at least according to most analysts. And then again, if you look at China's recent purchases of gold or retail gold imports, they were much weaker than expected in January to February, which usually sees demand supported by the Chinese New Year period. So it seems like people aren't exactly gifting gold as much this year. Do you think?
Yeah, I think you mentioned a couple of factors that continue to be tailwinds for gold. And I think with that backdrop, it won't be a surprise for them to continue pushing higher.
That's right. Some things that people will be watching out for, at least many traders will be watching out for, is the evolution of non-monetary China gold demand, and a rebound in the second quarter imports would likely enhance their bull case outlook to $3,400 per ounce over the next 6 to 9 months. Verdict for me, it remains hot in the bag.
I would say it's hot, but also worth watching out for gold mining companies, which have gone under the radar a bit more versus gold, of course, which has been on a bit of a tear.
Yep.
So last year was a bit of a tough one for gold miners because of the higher costs of labor, expenses and so on. But now with prices going up so much, they may be worth a look closer.
Ryan, it's gotten in my head. Every time you say gold, like G-O, I think of gold. But yes, I think the one thing that would be hard would be looking at gold on your neck. Now, the largest gold coin ever created, it was cast by the Perth Mint in 2012. Do you know how much it cost?
How big was it?
It weighed about 1 ton and measured 80 cm in
1
diameter.
ton? That's the size of a car, or at least the weight of a car.
It surpassed the previous record that was set back in 2007.
Okay.
Guess how much it cost?
Okay. I'm trying to measure it now.
Yeah.
Let's see. $1 million.
Oh, very good, Ryan. $1 million Canadian dollars. Now, Ryan, what is the boiling point of gold?
I never tried it before, but I'll go with 200 degrees Celsius.
Times 10. 2,808 degrees centigrade, which is also another form of degrees Celsius. It's just another translation of it. Now, how do you make gold soup, Ryan?
By melting it.
Put 24 carats in it. And that's all we have for gold prices.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.